Welcome back traders. Let's trade futures and options strategy. Last week the whole semiconductor was up and AMD is up by around 20 bucks. Are you looking for a long AMD? If yes, please watch this video before you buy a call. This is a strategy which will limit your losses but will keep your upside potential unlimited. So let's talk about it. Look at the AMD on a daily chart. In last 2 days it's up by around 25 bucks. 21 and 50 crossover happened in the month of November and since then it's up. And if you're still bullish on AMD and you're planning to buy a call, let's talk about it. Let's also keep in mind that in the month of May and August, the upcoming May and August, we are expecting earnings, right? So we will keep that information very handy for the future. If you are looking for Apex Trade funding account, right now 70 to 90% discount is available. Please use this coupon code and the link is available in the description. If you buy 100 stocks, you have an upside potential unlimited as well as a downside that you may lose maximum 20k what you have invested over here. If you remember, we talked about that in the month of May and August we are expecting earnings. After you buy 100 stocks of AMD and considering that May and August are the earning months, we will select 2024 September option chain. If you look at that, I have an intrinsic value and extrinsic value. This is very important. I'll explain you why. You have purchased the stock at 203, around $203. And again, it may change by tomorrow morning because I am recording this video on Sunday evening. If you buy a put from 210 to 300, you will see the intrinsic value from $23 to around $3. We are comfortable. Let's say we are comfortable with the $300. So I will go for 300 put. Again, this strategy required good amount of money because you need to buy 100 stocks of AMD plus you need to buy a put which is almost around $10,000. So you will need sufficient amount of money in your account before you implement this strategy. As I mentioned, we purchased 100 stocks of AMD at 203.17. After that, we purchased a put option at the strike of $300 for $100. So our investment is around $10,000. If you look at the risk graph, our maximum risk is now $372. If the stock falls to $100, no problem, you're only losing $372. But if the stock rises, let's say 230 bucks tomorrow morning, okay, we will be able to get $531 profit. Here I will explain you one part here. If you buy just 100 stocks and the market goes to let's say 230 and let's say around 180, we will take these two scenarios. If it goes to 230, you are able to make $2,600. Unfortunately, if the stock falls to let's say $181, you are losing $2,193. Whereas by buying a protective put, now if you see your maximum potential at the same strike 230 is only 560 bucks. But for any reason, if the market falls to 180, you're only losing $372 and that's your maximum loss what you will have. So there is no need for a panic scenario if the market falls to 180 or 160 or 140 or whatever the case is, because when you entered into this particular strategy, your mind was very clear that maximum loss is $372. In this strategy, we are not expecting you to hold this stock till the end of the day, and I'll tell you why. Because for example, this Friday, okay, this Friday on 8th of March, if the stock is at 230, you are able to make around 500 bucks, right? And your risk is only 372. Maximum risk is 372. So the idea here is that as soon as you place this strategy within a week time, just get out. If you are able to see the potential, just get out. If you are in loss on the day one, just hold on, because then you know your maximum loss is only 372. After that, in that scenario, you can hold on, because we have almost around 200 days for this expiration, right? So we can hold this one. So guys, this is the strategy where your risk is very limited, around $372 for AMD, but if the market goes up, you have a full upside potential. If you observe that you bought the stock at 200 and now the stock is at, let's say, 290, still you are in loss. And that's the idea. You don't have to keep this strategy open till the expiration. As soon as you see some profit for 500, 600, double the investment what you have. 372 is your investment, right? 372 is the maximum risk what you have, and if you're getting double on that part, just get out and open a new strategy. On expiration, if the stock is above $303, then only you will be able to make money. Otherwise you will not be able to make, because this put will come into picture. The way I will manage this, either I will get out as soon as I see some profit of 200 or 300 or 500 bucks to the next, move on to the next. Instead of buying a call, which is like you're melting ice cream, if you're not able to, if the AMD is not going in your direction, then you're losing money on daily basis. So instead of buying a simple call, you can implement this strategy, and where your downside risk is very limited, but you still have upside potential. And the intention here is that as soon as you open up this strategy, within a week time frame, as soon as you see the potential, just get out. Guys, as always, I do not recommend AMD for you to buy or sell or do anything. So please do your own research. Consider your risk tolerance before implementing any trading strategy. If you found this video helpful, be sure to give me a thumbs up and subscribe for more trading tips and strategies. Until next time, happy trading guys. Thank you.